Alright, what's up, you guys? So let's take a recap of this week's trading activity. On Friday, we ended about 252, right above the 250 support zone. And on Friday, I said that the market was going to pop because of the rebalancing of the quarter end rebalancing in everyone's 401ks. Since a lot of people lost money in equities, the rebalance happens automatically and it sells your bonds and buys stocks. Well, that's what happened on Monday, and then on Tuesday the rebalancing ended, and then everything started falling into Wednesday. Thursday it chopped around. This pop right here occurred because Trump tweeted that Saudi Arabia and Russia were coming to an agreement, and they were going to end the price war. So everybody got squeezed here, and that's why it went up so quick. Let's take a look at a 5-minute chart. So this was yesterday's price action. So that was a pretty sharp squeeze from 245 up into 253. So that was pretty quick. So I knew that this was like empty buying. This is just people getting scared that they were gonna get squeezed higher and lose money really quickly. But then after that ended, everything subsided and started falling back down, only it squeezed again into the close. But today, people came to their senses, and well, now it's coming back down again. So last week's email, I said that my personal bias is that we're gonna keep going down, and that there was gonna be moments of hope scattered in between while we go down. So I mean, that's exactly what happened. It's these little pops that give people hope, and then they just get smacked right back down. So here it's happening again, and you can actually see how it's starting to roll over. It's going to start going back down. I'm going to retest these 220 lows here. If we look at a longer term chart, let's see, let's go 6 months. Okay, so we February we were up here at 338, and if we draw a line from up here, from the top to the bottom of this, and then we duplicate that, go like this, we can see how far potentially we might go. Let's see. So we could possibly hit the 250 area, and that is where, oh dear, that is the top of the 2007 peak. This is right before the housing market crash. So based on this, we could potentially hit 250, and that's pretty damn scary. Let's see. Let's go back 3 years. No, that's too much. Okay. So yeah, there we go. That's a better view. You see, usually when there's a sharp fall like this, there's usually a rebound. It's called the dead cat bounce. Dead cat bounce is where people start covering their shorts. People, start buying again because they're hopeful, and then all of a sudden it just gets smacked all the way back down. And this is exactly. Let me remove this. Let's duplicate that. So you take this, the length of this, and you add it to the top of the bounce, and this is potentially where we might end up. 140. Good lord. So yeah, so this is where it might go. But anyway, so I am short biased this market. I have a large short position, and I'm waiting for this thing to roll over. But this week is pretty flat. I mean, last Friday we were here. Today is Friday. We could end up here, maybe lower, but generally it's pretty flat. Let's take a look at it, 10-day chart. So yeah, this is where we were, and then this is the stimulus run up. This is people getting squeezed because it's a sharp increase, and then settle back down, and then here is the rebalancing, and then people come to their senses, and now it's flat, and then it's just going to continue falling down. So that's where we are.